Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, September 7th, 2019. And I'm going to jump right into the reality check. So, I get ankle biters every time I talk about politics, but some of the politics that are going on do apply to investing and speculating. I'm agnostic towards politics. I really don't care who's in power. I don't want to get into my own personal views, but a pox on both their houses basically is my view. These people are psychologically damaged, all of them that want power over other people, and they're not there for your benefit. I mean, if you can't see that, then I really don't, I don't have much to say to you. I mean, don't come on my channel, comment section, start ankle biting. I'm just going to delete you. I'm going to spam you. Your views are not important to me. I don't care what you think about these things, okay? I've spent decades thinking about this. I've been involved in politics. I've studied the psychology and the history of this, and I don't really care what you think. You're not going to convince me. So we have these people that will still come on the comments and tell me I'm a moron and I'm an idiot. And do they actually think I'm going to engage them in conversation? I don't care. There are tens of thousands of blogs, message boards, and forums where you can go and impress everybody with your views. There, you can go there and work out your psychological issues there. You're not going to do it here. So when we talk about these things, remember, when I say something, it's not that I want it to happen or this is my desire or my view. I'm just telling you what I think is going to happen. I'm not endorsing anything. So when you come on and personally attack me for telling you what I think is going to happen, which is going to have a knock-on effect on what we're trying to do in the financial markets, I mean, you expose yourself as, kind of an idiot. So please don't do it. I'm just going to spam you. So, moving on, after having said that. Here's Elizabeth Warren, who is moving higher in the Democratic polls. I really don't know if she'll get elected, if she'll be the nominee, but this is what I found was interesting. She said, "On my first day as president, I will sign an executive order that puts a total moratorium on all new fossil fuel leases for drilling offshore and on public lands, and I will ban fracking everywhere." Okay, notwithstanding the fact that she probably can't do that if she does get elected, just look at the mentality. I mean, you have to live in reality, folks. Can you imagine what would happen if she could actually do this, if she actually got in power? I mean, this would get priced into the oil and natural gas markets immediately. You would see, massive sell-off in, companies that are operating in the Marcellus Shale, Permian, all these shale basins, all the service providers. You would see this get priced into the price of natural gas and oil, and she would be a one-term president. It's just that simple. These people do not understand how energy permeates every facet of life. They don't understand how many terawatts of energy are required for this modern civilization. And what most of you don't understand that are out there is how precarious our situation is. The only reason that you live the lifestyle that you live is because the abundance, ubiquity, and economy of the fuels that are provided to you by hardworking men and women. Okay? If you're not from a third world country, if you haven't traveled to a third world country, if you haven't lived in a third world country where the electricity just goes off randomly, that means you have no water because the pumping stations don't work, or you're in the middle of doing something and it stops, or whatever. I mean, you can go online and just read what's going on in Zimbabwe now with the power outages there and how it disrupts everything. If you don't understand this, if you're sitting in your air-conditioned home when it's 100 degrees outside, you're just taking for granted everything that's being provided for you. Industrial scale agriculture that allows abundance to the point where we have a diabetes epidemic in this country in the West. And then we have these people they're just know-nothings. They know nothing about anything. They're just ideologues. They're just opportunists. They're just people that say things. because they want to be elected. So personally, I don't care who's president. If she becomes president and tries to move towards this, we'll make a ton of money. Fossil fuels aren't going away. Go look at the BP statistical review, and it shows you that oil, coal, and gas will be around for a long, long, long time, regardless. And I think what's funny is that these people in the West, the narcissism that they possess, that they're on this quest that they're going to save the earth. What about all the other countries? They're not going to go along with this. Don't you believers in climate change understand this? Look at this slide. Demand is going up around the world in developing and emerging markets. Why? Because it is ubiquitous, easy to get, easy to use, and cheap. That's why. Look at this. China, India, they have over 1 billion people. That's 3 times the population of the United States. They're building thousands of coal plants. When is somebody going to go over and chastise Modi and Xi about building coal plants? I don't see anybody doing that. They want the West to deindustrialize, decarbonize. They don't explain what this means to people, that your standard of living is going to go down, that you have to, live a less consumer-focused lifestyle, which is what you will have to do. They're moving to ban meat now, cow farts, all this, and these people are nutty. I don't think that most people, even most liberals, you're telling me that all the liberals that are living on in the Upper West Side over there, these white, rich liberals, are going to stop living their lifestyle? No, they want everybody else to live like a hobbit, scratching a subsistence lifestyle out of the dirt, because that's what it means if you get rid of fossil fuels. Now, I'm not going to argue this in the comments because I'm in energy. That's what I do. I've been working in the energy sector for 40 years, so I know what I'm talking about. I actually have experience with renewables. I have experience in coal plants, natural gas-fired plants, nuclear plants. This Elizabeth Warren person was asked at the CNN Climate Change Clown World thing that they had recently. The guy stood up and he said, listen, one of the biggest things to decarbonize, because these people that believe in man-made climate change, the carbon dioxide is the big driver. So he's like, okay, well, what about nuclear power? Because we have this installed base and we can do more of that. And she said, absolutely not. We're getting rid of nuclear power. Also, we're not, because we can't store the waste. She doesn't know anything about waste storage. She doesn't understand how, because of the density of the energy of nuclear power, the waste stream is very dense and small relative also. The people of this country, the majority of them, are not going to accept living like a hobbit. They're not. They're not going to go down to communal living like the Soviet times, where 4 people lived in an 800 square foot apartment and they shared a kitchen at the end of the hall, because that's how the Soviets lived. So we can decarbonize. No, people like their houses in the suburbs, 2,800 square feet. They like to be comfortable in the winter and cool in the summer. They like refrigeration. They like to eat steaks and hot dogs and hamburgers. So I think, these people say these things, I think, to pander to their bases, and this is what I don't like about these people. They're just liars and schemers and grifters, So I just wanted to point this out. I mean, these are the things I put in the reality check, because it's stupidity squared. This person's never going to get elected if she talks like this during the general election. I mean, Trump will eat her up like a bonbon. It'll be Trump slide 2020. I don't care who you are. If you actually think these things through, unless you're one of these zealots, that's a small portion, a small but vocal subset of the population want to live like hobbits and are climate Nazis that are crazy about this stuff. Yet they get all the attention. The average person, no. Once they interview people, they'll say, are you for green renewable energy? And like 60 or 70% of the people will say, absolutely, I'm for it. Then they'll say, well, are you for it? Then they'll qualify the question further by saying, well, if if your energy rates need to go up by 60 to, 50, 60, 70, 100%, are you for green energy then? Then they're not for it. People are for stuff as long as they don't have to pay for it. Once they have to actually pay for it, they're not for it. That's the American people right there. All right, that's enough for the reality check. I'm sure I'm going to get the incoming fire. People don't like their shibboleths or their little heroes attacked, but too bad, so sad. Wanted to talk about central banks are now, every central bank around the world is just about cutting rates, guys. Quick little summary here I saw on Twitter, just captured the screen. Fed's easing, ECB's easing, Bank of England's easing, Bank of Japan's easing, Australia cut rates this week. You just go down the line, even smaller countries, Chile, Ukraine. I have a site I go to that tracks this stuff. Weekly, by the week, tells you what countries. Everybody's in easing mode. And I think this is important to understand because everybody's worried about a worldwide recession, depression, financial crisis. And I'm not sure I see it. We're going to have a small slowdown. I think it's going to be like one of those times when I kind of equate it to, I fly a lot, so I pick up these germs, but I don't get a full-blown cold or flu, but I just get like a day or two thing. Like my immune system remembers like the last time I had the thing 8 months ago, and it starts to get a foothold, and then it comes in. So you just feel a little bit feverish and sick for a day or a day and a half, and then it goes away. That's what I kind of equate to what's happening in the world economy. There is going to be this flood of cash, this flood of currency units that's being created. And, contrary to popular belief, central banks can make the economy expand. They can create inflation. They can put enough currency units into circulation. They can print enough to now I'm not saying it's a good thing, but they can do that. And I think I saw a chart this week that I think kind of backs it up. This is very interesting. I thought this was excellent. What it shows basically is the black line, obviously, on the chart is global manufacturing PMI. PMI I've talked about before, but let me go ahead and define what that means. That's the Purchasing Managers Index. And what that indicates is it's a survey of purchasing managers in manufacturing plants and businesses. And they do a survey and they respond whether or not they're, activities in their industry or in their business, and then that distills down to this index, which gives a indication. For example, if it's above 50 here, then if you're above 50 on the PMI, that usually indicates, or it does indicate, an expansion in manufacturing. Conversely, if you are below 50 on the PMI, that usually indicates a contraction in manufacturing. You'll know from last week's video, the PMI in the United States actually fell below 50 in August, 49.5. That's the lowest reading since 2008. But nevertheless, what we have here is the PMI reading on the left, and that's indicated by the black. You can see 2008, the recession. You can see, or the great financial crisis, this thing doesn't even show how far it dropped. But you can see, it vacillates. And what's interesting is this blue line, which is the net number of central banks which had their last move as a rate cut. And I think what you can see here is that as rates are cut and money is printed, if you will, or created, currency units are created, because that's what they have to do. How does a central bank actually make rates go down? They create money out of thin air and then go into the open market and buy the government bonds, and they're constantly in there buying and selling to maintain the new rate if they do a rate cut. So what you can see here is that as you have more rate cuts, and as the line goes up, that means more central banks cutting rates here on the right. You can see there's a bit of a lag, but PMI follows that. And that makes sense, right? If you have a bunch of central banks cutting rates, creating currency units, putting them into circulation, they can create economic activity. And you would expect that as economic activity picks up, that the Purchasing Managers Index would follow. So I think this is interesting because we are seeing more and more banks, central banks around the world. It's now a majority of central banks. I've pointed this out, on that Council of Foreign Relations website shows it also. And I'll put a link to that. I'll put a link to the central bank website that I look at that tracks all of this. You should be tracking these things because that's what's going on right now, folks. The central banks of the world are panicking. They are trying to get an advantage on each other because as they lower rates against each other, that lowers their currency, which presumably will lead to cheaper exports relative to their trading partners. I mean, it gets a little bit complicated, but obviously if you put more money in the circulation, the value of your currency goes down, and that will benefit your country's exporters. That's the thinking. And, this kind of ties into what I said last week, which got me, incoming fire. The rise of nationalism, the rise of people in the working classes and middle classes around the world wanting to put their own national interest above all others is leading to more nationalism, which is going to lead to more competitive currency devaluations and tariff wars and currency wars as we go forward. That's what's happening between China and the U.S. right now. And I expect to see more of this as globalism, the post-World War II world is collapsing. And a new world's coming forward where people are saying, I want the interests of my country put above other people's interests. We are going to elect leaders, and you're seeing that happen. You just saw it in Germany last week. The Alternative for Germany party, which is I wouldn't say right wing, but it's a nationalist party, anti-immigration party in Germany, had tremendous results in the recent elections. And of course, what did the two parties, the Christian Democratic Union and the Socialist Party, are going to form a bloc to, presumably keep the AfD out of the government. So you're seeing more of this. It takes several election cycles, but that's what we're seeing. And we're going to see more competitive devaluations. We're going to see a race to the bottom. We're going to see more money printed. Gold's already sniffing this out, although gold's pulling back over the last week because it's overbought. It's got ahead of itself. Nothing goes straight up. Still long-term bull on gold, but this is what we're seeing. And with a lag, you throw enough money at the economy, at the world economy, with the kind of debts we have out there, you can make economic activity happen. This chart shows it. Now, it doesn't go, I don't have it before 1997, but basically the last 20 years is basically we've been through this huge monetary experiment where the central banks are the central actors for everything. And we see the correlation. We're tracking this. More central banks are cutting rates every week. So expect to see, one of the things I think that a lot of the people that are projecting an economy can conceivably, theoretically, never go into recession. These economic expansions don't just die of old age. They're murdered. They're killed off by clamping down on monetary policy. Or what you see is a big move in energy prices, which causes inflation, which causes the central bank to have to raise rates and kill the expansion. But notice what we haven't seen. We haven't seen a big run-up in oil prices. Now, I believe that's coming. I think that's what's going to kill off this money printing scheme that we're in the middle of right now. We are going to see commodities move higher because as you print more currency units, it raises the costs of things relative to the amount of currency in circulation. That's why you're seeing gold move higher. Okay? And I think that they're going to get they can force an economic recovery. They can force economic activity. They can prolong the reckoning. But I think at some point, energy prices are going to get away from them. I mean, remember back to 2008, the great financial crisis. I said one of the things that people forget about is they blame everything on housing. Speaking to that, I did watch The Big Short again last night. I really liked that movie. If you haven't watched it, about the housing crisis and the mortgage bond market collapse, that's an excellent movie. But anyway, you will recall, or maybe you don't recall, that oil prices were like $150 a barrel before the economy imploded. I think that had a big deal. That was a big deal of what happened. I mean, if you recall, and I recall this, the hypocrisy of even a Nancy Pelosi, super liberal in California, when oil prices were $150 a barrel, even she was suggesting that the moratorium on oil drilling offshore California should be considered to be lifted. Because why? Because gasoline prices were like $5.50 or $6 a gallon in California. And I don't care who you are, liberal, conservative, agnostic, if you're paying $6 a gallon for gasoline, you want somebody's butt. So what I'm saying to you is that we're seeing these competitive devaluations. We're seeing this tremendous amount of money printing. We're seeing central banks around the world cutting rates. Now, it's like a tsunami. It doesn't just happen the next day when you start cutting rates and economic activity picks up. The money has to get to circulate. There's a lag to these things. There's a lag to monetary policy, a year, 18 months. But if this continues, if this lowering of rates, competitive devaluations, this nationalism, the tariffs, the trade wars, this is all going to manifest itself, I think, in more turmoil, higher costs, and eventually, I think, some armed conflict. But right now, I mean, I'm not really a doom and gloomer right now. I think we might have a small setback here in manufacturing. And manufacturing isn't the all end all be all of the economy. It's only like 15% of the economy. That's the whole thing with this China-U.S. thing. Like it's the end all be all. I mean, China-U.S. trade's only like 3% of our GDP. It's nothing. But it's made out like it's the end-all, be-all. Stock market's rallying or going down 400 points at a turn every time there's a tweet about U.S. trade in China. The longer-term picture with China is that what's going on here, folks, is that the U.S. is in decline as the world power, and the Chinese are trying to be ascendant. This happens at every transition of whatever empire is controlling the world. As a declining power tries to hold on to a power and sees its power waning and tries to nip the ascendant power before it can, take, now I want to use the word take over, but become the world power. So that's what this is about. So regardless of who's in power in the U.S., whether it's a Democrat or Republican, they're going to have to deal with this. And, I've already talked about the debt that's out there. I'm not going to talk about that again, but money printing is going to happen at a level that people are not prepared for. And I think that that's going to be great for commodities. Again, commodities are basically at an all-time low relative to stock prices. I can go on and on and on here. But I wanted to point these things out. I think it's very interesting, and I think people need to consider it. Now, I had a request to talk about this, and I've been meaning to talk about this, a shipping review. It's one of the sectors that we're very interested in, that we think we can make a lot of money in. And in the past, tremendous amounts of money have been made in this sector. But it's a very cyclical business, and you have to catch it at the right time. And I think that a upcoming catalyst is going to compound what has already been coming out of a 10 to 11-year bear market in shipping. Now, shipping, again, is a terrible business most of the time. It's filled with a lot of people that have their own self-interest, these shipping owners. A lot of the management teams are not shareholder friendly. They're typically not making money. It's a very competitive industry. It's a commodity type business. There's nothing proprietary about running a ship. You hire a Filipino crew as cheaply as you can, flag it in some, third world country, and try to get the operating costs as low as you can, and just run the hell out of the thing for 20 years and hope that you can, but most of the time you're losing money doing this. So there are times, however, though, when things come together, it's like any cyclical industry. As shipping rates go higher and higher and higher coming out of a bear market, what does that do? Well, the shipping executives are like mining executives or executives in the housing industry or any other industry. When the salad days appear, they start building more ships. And that is the, seeds of their eventual next bear market. You get an oversupply of ships, shipping rates collapse, companies get in distress, rinse and repeat. These cycles go, come and go. So I think one of the things to recognize is the shipping industry has been in a long-term bear market. There's been a lot of bankruptcies, consolidations, mergers, acquisitions as the shipping industry is consolidated. But I think what people are missing is that there's a catalyst coming up in January of next year. It's called the IMO 2020 regulation. It's a regulation that will limit the amount of sulfur in fuel used by shippers to about 0.5% from the current 3.5%, and it takes effect on January 1st. Now, why is this important? If you look at any kind of pictures or videos of big cruise ships, or even like your bulk carriers, or any kind of big ocean-going ship, you'll see a tremendous amount of black smoke coming out of the back of this thing. So they basically use these big, huge, slow-speed diesel engines that burn like this crappy heavy bunker fuel, it's called. It's very, very dirty fuel. It's basically the residual products of the refining process. And it's very, cheap for them to use, but it's very polluting. It's very high sulfur, sulfur dioxide, various other pollutants. So the International Maritime Organization has come up with this new regulation that's going to limit the amount of sulfur that can be in fuels going forward. So, the shipping industry has to adapt to this, and they've been slow to do that. So there's three things basically that a shipping company can do to comply with these regulations that are coming into effect. One is they can take their ships and install a SO2 scrubber on the exhaust. Basically, that will allow the shipping company to continue burning the low-cost, high-sulfur fuel. The scrubber will take the sulfur dioxide out of the waste stream. It's mixed with water, then pumped into the ocean, or held on board and pumped off at a port. That's one way. Another way is to burn low sulfur fuel, and that's presumably going to be more expensive than the high sulfur fuel. So you could say, I'm not going to install scrubbers, so I'm going to run this higher cost fuel. And one of the things you can do when you run the higher cost fuel is you can slow steam your ship. And what that means is instead of running at like 15 knots, you run at 13 knots or 14 knots, and that slows the ship down and cuts fuel consumption to kind of balance out the higher cost of the fuel. Or the other thing is you can buy, if you're building new ships, you can power them with LNG, higher efficiency engines, but that's not something that's going to happen over the next year or two. So what's happening and why this is going to be an issue is, and why we think it's going to presumably cause a move higher in shipping rates and consequently a movement higher in shipping stocks, is that, as like most people, a lot of these shipping companies have waited to the last minute to try to install scrubbers. So you have this situation where all these shipyards are slammed now trying to install scrubbers on ships. And from the reports that I'm hearing, I will attach a link to a podcast that Mike Alkin and Harris Kupperman did last weekend, talking about this more intact. I mean, Harris has done a lot more work than I've done on it. I'm more of a generalist, but he's really deep dove this thing. And this is a new technology, and it's taken longer to implement than most people thought. So what does that do? If you're sitting there in a shipyard, or you're waiting outside the shipyard with your bulk carrier to get a scrubber installed, it's not on the trade routes carrying coal or grain or iron ore. It's not generating revenue. So the supply of ships that's out there that can move cargo is smaller. You see where this is going? It's the same thing. If you have the same amount of ships, but a considerable amount of them are slow steaming, it's taking them longer to get to ports, you've basically lowered the amount of ton miles that's available for moving product. Okay, so what you're seeing is less supply. Now, the other thing is installing scrubbers is not like a $10,000 job. This costs, millions, a couple $1,000,000 to do, and the ship is out of service for 30 to 60 days in the shipyard having this done. So, the lifespan of a ship typically is 20 to 25 years. So if a ship is already late in its life cycle, does it make sense to put a scrubber on it? Probably not. So what it does make sense to do is maybe run it on some low sulfur fuel and slow steam it and just see how rates land. And if rates don't go up, then maybe these ships get scrapped. That's probably what's going to happen. You're probably going to see an increase in scrapping. So that's going to lower the amount of ships and lower the amount of supply of ton miles that are out there. The other thing is most people think that the trade wars are bad for shipping. That's why you saw a big sell-off. Again, first level thinking. The average person out there thinks, oh, well, China and U.S. are having a trade war. Who would buy shipping stocks? Well, wrong again. During our period of globalization, when everybody was friends, trade routes are optimized. People want to go directly as fast as they can between these ports because it lowers the cost of shipping, consequently lowers the cost of the products. Now, as you've disrupted things with these tariffs, you've seen things like the Chinese shipping things to Vietnam, taking things off the ship, repackaging them, or doing more of the manufacturing in Vietnam, so the product is considered a Vietnamese product, then shipping it from Vietnam to the U.S. Okay, so you've just increased again the longer the trip, the more ton miles required, more demand. So trade wars and trade disruptions and the collapsing of globalization is another bullish factor towards the shipping industry. It's the same thing. I mean, so people would say, well, John, you've brought up all these supply constraints that may or may not be out there, but if they are and shipping rates go up, which they are in many sectors right now, and I'll show a chart on that, why won't the shipping companies just build more ships? Well, eventually they will. But right now, their balance sheets are terrible. Remember, they've been in a 10 or 11, 12-year bear market. They've had their balance sheets decimated. A lot of shipyards have closed down for lack of work or went bankrupt. And we've also seen a lot of banking interests or banking companies or finance companies that used to be involved in financing the building of ships, because no one's just going to pay cash for a ship. These things are financed. We've seen that back away. So even if you wanted to go out there and expand your fleet, you would have a hard time doing it right now. Plus the fact that it's going to take you, once you put an order in and get a slot in the shipyard, it's going to take you, 2 or 3 years to see that ship get built, commissioned, go through trials, and get released for service. So it's a supply-demand dynamic, where the supply, I've just talked about several ways supply is contracted or supply is being constricted, yet demand is not falling as fast. And as I pointed out in the previous discussion, we're seeing this wave of money hitting the world economy, and we're probably going to see an upswing in commodity demand and shipping demand right when these regulations are going into effect. So I don't think people are looking at this, at the higher levels of thinking. They just look at it and say, well, there's a trade war going on, there's a worldwide depression coming, who would ever buy shipping stocks? Not a good way to think about things. Another thing that I didn't talk about was, the whole distribution, refining, and distribution of these lower sulfur fuels is going to be a cluster bungle. I don't think that supply chain's fully set up. That's going to take time to sort out, and that will cause delays and raise costs, which will also raise rates, shipping rates. So, talked about this, new shipbuilding will lag as it will take time for shippers to repair their damaged balance sheets, and many shipbuilders have went bankrupt. Now, I think that'll be an excellent industry to look at, 2 or 3 years down the road. These guys are going to do what they always do. Once rates take off and they get up and are sustained for a while, they're going to start, and they get their balance sheets, repaired, they're going to start going out and putting ship orders in. It's just inevitable. That's how this works. Okay, it's kind of an ego thing with these guys. They want to have the biggest fleets, this whole thing, and this is just human nature. These cyclical businesses, this is how it works. Seen the same thing in offshore drilling, seen the same thing in mining. So, we could see a 2 or 3 year window of really high shipping rates. Now, I just want to show the Baltic Dry Index as we close up here. This is just one of the shipping indexes a lot of people look at, but you can see, this goes back several years. You can see that it was in an uptrend. It kind of dropped off in early 19, and then it's been basically going straight up. Now, why is it? I think it is because a lot of the, it's starting to have an effect as ships come out of service, to have scrubbers installed, and things of this nature. This thing's making new highs, relative new highs from the last, several years. So I don't know how high this is going to go. I don't know if this thesis is 100% going to play out, but that is basically how I'm thinking about the shipping industry. And I would really, like I said, I'm going to put the link to Harris and Mike's discussion. I'll also put the links to Harris's. He's written about 6 articles on his website that are very good talking about shipping. And the one thing I would say is I don't want to get people's juices flowing, but one of the things he did say is, during one of the previous shipping cycles, it was nothing to see some of these shipping companies go up 50 times in value. That was not clear the wax out of yours. It wasn't 5 times. He had a couple companies go up 30 to 50 times, not just one company, a couple. So when these things do go on a run, they can go on a run. So I think it's something that, speculators should look at. It's not, this is not savings bonds. It's a very speculative business, very speculative industry. It's a crappy business, doesn't usually make money. It's not a buy and hold for your kids' college. It's a identify a cycle, identify a catalyst, and then jump on the bandwagon for the run and then get off, know when to get off. So that's kind of the quick and dirty on shipping and why I like it as a speculative vehicle for the next couple years. All right, guys, that's it for this week. I appreciate you guys subscribing. Hit that bell, hit the like button, comment. Let's have some conversation about this, and appreciate the support, guys. We'll talk to you next week. Thanks.